In this video, as part of the Candlestick School series, we're going to look at the abandoned baby pattern. Rare but powerful. Stay tuned. Hey traders and investors, a very warm welcome to you. So let's talk about the abandoned baby pattern. Another crazy name for a candlestick, but hey, I don't make them up, I just trade them. So what is it all about? Abandoned baby is basically this. So have a quick recap and then we're going to talk about when we can use it, markets we can use it in, stops, entries, exits, all the other good stuff. So abandoned baby is pretty much like this. We have a scenario where you've got a candle, uptrend or a downtrend, let's use an uptrend as an example, close, next day the price gaps up and we get a candlestick that's gapped up like this. Generally speaking, this candle is going to be a small candle. The point is that there's a gap there, so the high of this candle is the high of the first day candle is lower than the low of the second day candle. Now the next day after that, i.e. day 3, we get a gap down, so we get this scenario. So in other words, there is fresh air between the low of the middle candle, the baby candle. So it's called an abandoned baby because it's just there, it's left in fresh air, there's no gap fill, it's gapped up, and the next day it's gapped down. And then if we flip it vice versa, that's on to the downside. So the theory behind it is this: market is driven up, market is gapped up on good news, so we're going to be looking at some kind of stock or some kind of cash index or some kind of market that has a closing period. Obviously for FX, we're not going to get these as often because we only have that closing period over the weekend. So we get some kind of news that reprices the market enough for it to gap up above the prior day's high. Price kind of just sits there and doesn't do a lot. It doesn't like rip off to the upside. We're not talking like a big long candle, a big bullish candle or anything like that. It kind of sits there and it accepts the price as gapped up. Bulls are a bit cautious, bears are kind of backing off a little bit, so you get that small range candle, the baby candle. Next day we get a reprice scenario again, but in the other way. So then it gaps down and then trades done the next day. Hopefully we've got like a nice red candle or some kind of candle that doesn't really is not going against the grain of what we're talking about. So how do we trade it? So we're looking for a good move in one direction, a gap, and then the gap against it. Now, first of all, why do these things occur? It just makes no sense, right? So why we gap up one day, gap down the next? Normally, it's around some kind of news or some kind of extra volatility or something like that. They're good because these signals are rare, but when they do happen, they are really showing us extreme volatility. They're really showing us extreme movement, extreme gapping. And when we get that, we have opportunities as traders. So daily chart, obviously because it's gaps, we're not going to get it on intraday chart unless we're kind of really high fast market environment, which is just not really what we're looking at. It's going to be daily chart from the close to the open. Got one here for you on Google. This is to the downside. It's a daily chart of Google or Alphabet. Push lower. You can see we've gapped lower here for whatever reason, and we've done a little bit of work down here. Not a big candle, so a baby candle. The next day we've gapped up. And look at that, that is a monster trade. And I know that we're hindsight here and we're potentially cherry picking, but you'll probably find that most of these abandoned babies do have these big moves. And so textbook wise, what you would do is you would say, okay, I will either take it on the close of day 3, i.e. that's day 1, day 2, day 3. In this example here, let me zoom in a little bit here for you. There we go. We've got day 1, day 2, day 3. You'd probably close take it on the close of day 3 because for it to be an abandoned baby, you want to take it at the close because it might still gap through. And obviously, as you're getting closer to the actual closing bell, you might jump the gun a little bit. And some people are like, oh, you shouldn't do that, or whatever. But you know, if it's not going to fill the gap and you think you can get a better price, and you kind of want to use a little bit of intraday skill to get a better entry, I think that's fine. So you take it on the close and then your stop would be at the low of the abandoned baby. So in this example here, what's the close on Google? It's 680. Low on that abandoned baby, 663. So there's your stop, and your target's going to be, it's got to be something decent, guys, because this is a rare pattern. And you want to be paid for being right on this. You want to be paid for being aware and vigilant and taking this, because you know, when this comes along, because it's such a distinct supply demand shift, you know, you're gonna try to squeeze as much out as possible. And this is a perfect example. You know, if you look at Google here, it just ran up $100, you know, $100 without much pullback. Now of course, if you're swing trading that, you might be looking for more than that. You might be saying, hey, you know what, I think this is kind of a bottom of a range we've been in for half of a year, and especially if we have it as support as well. You know, we're adding, stacking those layers of edge. We've got it as support as well. It's done an abandoned baby pattern. Hey, I'm going to hold it for a push to high. So maybe you're holding it for 790, maybe you trail some, maybe you're just in it for a kind of 5 or 6 day move. I wouldn't recommend that. I would say try and squeeze as much out of it, because this is the kind of thing that if you get on the end of it, you can be picking tops and bottoms, because this is what happens at tops and bottoms. Anyway, let's have a look at some others. Let's look at a failed one as well. I've got a failed one for you here on Under Armour. So this is technically still an abandoned baby pattern. If I zoom in again on this, we can get a better view. This is Under Armour on a daily. So we get the gap up and we get the gap down. So this here strictly is an abandoned baby. Now, it's not quite as clean because we have the gap has already been filled from the prior day, like day -2, I suppose we could call it. Day 1, day 2, day 3. But technically speaking, it's still an abandoned baby. We are looking at it in the scenario of it's actually at resistance, so it's probably ticking quite a few boxes here. And actually, you know, if you weren't looking at that right hand side of the chart, it would look quite bearish. So you'd probably be going short on the close here, and as it happens, that happens to be the low of that move, and you would have been stopped out. But we like transparency here because this is what it's about, guys. It's not about showing cherry-picked genius trades that hindsight would have taken. It's about saying, hey, I would have taken that because you know what? It looked pretty good. At this end of the screen, when I'm looking at it, I'll be like, you know what? That looks nice. It's failed at resistance. It's got a kind of a bit of an abandoned baby pattern. It is abandoned baby. Perhaps not as abandoned as it should be because there's still some not fresh air there from the couple of days before. But I'd probably be all over that, and I'd have to take a stop on it. And you'd be stopped out just above that high there. And you probably, if you're unlucky, probably get gapped up on the next day and be stopped at 43.56. So you'd take a bit of a hit on that. But then when you look at how much it ran, Google ran, you can afford to take that. You can afford to take, you know, if that's your one risk is 1 unit there, and you've got, you know, 10, 15 times your risk unit there, you're doing all right. So, you know, they're good patterns, nice patterns. One more for you on Spherics. This is a little bit different because it's a kind of thinner stock, really news-based stock, and it happens a lot on these kind of things. You don't get it so much on your Googles, your Apples, your Netflixes, all those kind of stocks, the bigger stocks. But when you do, they're worth looking at. You get them a lot more on the smaller news-driven stocks like this Spherics company here. Obviously, some kind of news came out, some positive news to drive it up 100% in a day. Gaps up the next day, but then for whatever reason that news happened to be false or it's misread or whatever it may be. Who knows what the story is with this thing? But there's an abandoned baby, genuine abandoned baby. It's popped up. The range is a little bit larger perhaps than you would if you were textbook, but relatively speaking compared to the range on here, it's okay. Next day it gaps lower, and you're shorting that at the open. Now, would you want to have a stop right up there? No, you wouldn't. You've got to use some common sense with this one, guys, and say, hey, you know, I'm not going to have a stop. I'm not going to go short of $46 and have a stop at $80. The risk reward isn't quite right. So you're going to have to kind of use a little bit of common sense with that one and say, well, maybe I can use an intraday stop, maybe I can use an intraday high as a stop, and play around with it. You just use the signal as a trigger to get in and then be a little bit more clever with it. But you'd be trading at the open, you'd be going short. And to be honest, you've not got much heat, have you? You've got a quick kind of $6 in the bag there, $7 in the bag, and it just rolls over. And actually, I think from then on, it just kind of pretty much disintegrates into nothingness. So if you were watching that and you got on that, that would have been quite a nice decent trade, depending on how you quantified the risk. There's a bit of ambiguity there of how you quantify that risk, but hey, that's trading, guys. That's the name of the game. Keeping that risk managed and getting a decent risk-reward ratio. So that's the abandoned baby pattern. You know, this is a nice one on Google. Pretty clean, pretty clear. If there's one to take away from it, this is probably it. It's right in a good position. It has got that clear gap. It's got a small range on it. It ticks a lot of boxes. Under Armour, same kind of thing, a little bit more grubby, but I probably would have still taken it. But you know, you take a hit on that, and that's not the end of the world. One to look out for, decent markets. Decent markets to trade it would be everything but your FX, unless it's unless it's a Sunday night gap. But then you're not going to get the subsequent gap. You need 2 gaps. So you want the stocks, US stocks, UK stocks, a cash session for like SPY, your S&P 500, or for your Dow, just a cash session only, DAX, FTSE, that kind of stuff. Anything where you've got that closing point. And like I say, daily charts only, obviously, because of the gap. So one to keep an eye out for, guys. Good one, rare but decent. See you in the next one. Take care. Bye bye.